two column, and then you will see that somewhere next to it you have the details for the working. So this is not the answer, but the answer is just the format here, which is the notes on PPE. So we can go back to the question, but before that, in this question that I have chosen, there is accumulated depreciation. There is also impairment loss issue here. So therefore, I have already prepared the notes where you can see first section is the cost and valuation. The second section is accumulated depreciation. The third section is the impairment loss section, which is accumulated impairment loss. We're going to also have another explanation on impairment loss using this question. And the last section is to calculate the carrying amount, which is taking as what you have here, which I call it A, B, C. And when you take A minus B minus C, you are going to have the detailed carrying amount. Are you still with me? Can you still see my screen? I'm now showing you Excel screen. All right. So let's go back to the question. So this is the question. So you have the detail there. First, look at the date that you are given the information. So if you can see here, the information given to you is as at 1st of January 2023. You have two types of asset. One is building at cost together with accumulated depreciation. And these are all information as at 1st of January 2023, which is the beginning of the year that you are asked to prepare the schedule or the notes on PPE. So the end of the year is 31st of December. So anything happened between 1st of January 2023 up until 31st of December 2023 must be shown in terms of the movement. The next one is that you have another asset, which is machinery. Machinery. Okay, I thought someone is trying to enter. Okay, you have another asset, which is machinery. So the machinery here is 250,000, and you also are given the estimated useful life, accumulated depreciation. Take note, these are all as at 1st of January 2023. So the first step that you need to do is to transfer this item here, which is the one under building, transfer this and this to the so-called template. So go and transfer it here. So you're going to do this here. You're going to transfer the cost of the building here, which is the figure just now, 25 million. You will transfer here, right? And the accumulated depreciation of the building will be transferred here. So you will transfer in the section of accumulated depreciation. That is the balance at the beginning of the year. So that is the first step that you need to do. Second one is that you will do the same for your machinery. So your machinery, you have this, right? 250,000 for the cost, and accumulated depreciation 125,000. So transfer this two amount to the correct column. So you are going to transfer it here. So for machinery, in the first row, balance beginning of the year, which is balance as at 1st of January 23, the cost. And for the accumulated depreciation given in the question, you are not asked to calculate, you are just given the information. Some question you may have to calculate the accumulated depreciation yourself, but this one is given. So after you have done that, you can now read the question and see what are the information given for you so that you can prepare the notes. Okay, we start with the information that was given here. The first one, you can see you are informed regarding the company that adopts revaluation model. So this company adopts revaluation model, and also, and that was the cost model for subsequent measurement of building. So for building, they adopt cost revaluation model for building, and for machinery, um, sorry, for building, it was a cost model for the revaluation model, but for the machinery it is cost model. So cost model for machinery. So you are informed the property, plant and equipment are depreciated using both of the asset using straight line method. And you are informed full year depreciation is charged in the year of acquisition and there is no depreciation in the year of disposal. So this statement here means that you are using yearly basis. So these are just information. So let's look at things that are related to your preparation of notes. So you have here on 1st January 2023. 1st January 2023 is actually the beginning of the year, beginning of the current year. I put here BOY, beginning of year. Yeah. So you have beginning of the year. You are informed the fair value of the building. So you are informed the information on fair value. So this is the first revaluation. So this one is your fair value. So that fair value is given there. Fair value. This is actually fair value on the first revaluation. So FV1, fair value first evaluation. You are informed the fair value was 27 million. So what you need to do is you need to check and compare the fair value on this date, 1st January 2023, and compare it with the carrying amount also on 1st of January 2023 so that you can find whether a revaluation or a surplus or a deficit. You are also informed the remaining life of the building, remaining useful life on that date. It was 45 years. So here you are informed 50 years. 50 years means estimated useful life on the date you acquire. But after 5 years that you have used it, the remaining useful life was 45 years. Okay. So that was for building. And the second one here is information relating to machinery, where on 31st of December 2023, you have a machinery that was equipped with the latest AI technology launched in the market, and that has rendered your existing machinery to be obsolete. So meaning that there is an indicator of impairment. So if there is an indicator of impairment, the carrying amount of the machinery as at 31st of December 2023, you now need to go and compare with recoverable amount information. So you can see here, the company decide to conduct an impairment test for the machinery. And you are informed the fair value less cost to sell of the machinery was 90,000 and the value in use was 75. Remember I mentioned to you recoverable amount is the higher between the fair value less cost to sell 90,000 and the value in use of 75,000. So if you can see here, you compare between this and this, your recoverable amount would be 90,000. Okay, that is what you are going to use, which is recoverable amount, which later will need to be compared with the carrying amount. And then you need to do some entries on impairment loss, and that will have to be reflected in the notes. Okay, I'm going to put this side by side like this. I'm going to put this here so that you can see the information as I do it. You can also check your own question if you want. I believe you are not using your phone, so you can see what I do clearly. So step number one. So for the building, for building, you can see that the revaluation of building is at the beginning of the year. So here is the information that tells you the building was revalued at the beginning of the year, where here it was 1st of January. That was the date. So on that date, you need to go and first find out what is the cost. So the cost is actually cost as at the one given here, this one, 25 million. So this is the cost that you are going to include here. So that was the cost, 25 million, which refers to the cost that was given in the question. And then your second step is to find what is the accumulated depreciation, because now you want to go and find any revaluation, surplus or deficit. So accumulated depreciation that you need to go and calculate should be accumulated depreciation as at 1st of January 2023. And the amount you don't have to calculate, it is given. So it was given where? In the question here, this one. 2.5. This 25 also was given here in this question. So just pick this and put here. All right. Now, next, you can now find your carrying amount. So your carrying amount at the beginning of the year, this is there is no working needed for this. Your carrying amount as at that date would be 22.5 million. So now 22.5 million is at the beginning of the year, and your revaluation, first revaluation, took place also at the beginning of the year here. Fair value 1st of January. So therefore, you will compare with that fair value. So the fair value on this date is 27 million. So after you have done that, you will see that fair value are more than the carrying value. So that will give rise to revaluation surplus. So what are the things that you need to record? So number one is the accumulated depreciation that was at the beginning of the year. You need to go and eliminate. So when I say eliminate means you need to go and debit to your accumulated depreciation, and you need to go and credit to your building. So you just can put this little working here, credit. I put here credit B. B here refers to building. So this 2.5 million, because you credit debit accumulated depreciation, it will have to be adjusted here. Elimination of accumulated depreciation. This 2.5 million. You can see I put same highlighter here. So this must be eliminated because the asset is being revalued. Next, you have to record or include in the movement the surplus. The record for the surplus is not you do this because first surplus, debit building, credit, ARR for building. So therefore, when you credit ARR for building, it will not appear here. But when you debit building, it is actually here, which is your 4.5 million. So revaluation surplus should be added. So that is what you did. And there is no new addition of asset, no new acquisition for building, just the revaluation. There was also no disposal, no derecognition. So you can now total up. When you total up, you get 27 million, which will be your fair value here, which is going to be your fair value that you have uh, been given. And at the same time, when you eliminate accumulated depreciation and you credit building, it will also appear here. So when you debit accumulated depreciation, it is here. So I put all the workings here. You can check, I put all the workings here, right? So this refers to this working. Working number one is for the building. Working number one is for building. So here you have the working for building, working one. And the elimination of accumulated depreciation is also working one. So these are all the one that I produce here. So here, this is the one here, 2.5 million. You debit, you remove, you credit building, you also remove from building. The next one is that starting from 1st of January 2023, depreciation charge for the year, which is for the year ended 31st of December 2023, starting from 1st of January 23 up until 31st of December 23. Your depreciation will have to be recalculated because you have now revalued the amount to be 27 million. So you will take 27 million and you will divide with the remaining useful life. So in the question, you are informed the remaining useful life here is 45 years. This one, this 45 years, right? The one that I have put a red tick there. So you divide by 45 years, you will get 600,000. So this is the depreciation charge for that year. Actually, the working, it is actually next to the question. I put it in the working, but you don't have to do the proper working like this because you just need to do that as a simple working so that you only understand. So you don't have to do as the complete as this. So this one would do as well by doing like this. Debit, for your own understanding, debit depreciation, credit accumulated depreciation for building. So you can Therefore, this one must be included because debit depreciation is in the SOPL, but credit accumulated depreciation will be where? It will be in um, the notes to the PPE, which is this 600,000 here comes from here, from this cell I14. So cell I14 will be transferred to cell C14. So when you do that, you have the charge for the year, depreciation expense for the year. There is no disposal for this asset, but if you have disposal, you may have to do that as well. But here, no disposal. So at the end of the year, the accumulated depreciation for that asset is 600,000. And therefore, there is also no impairment loss for building. So I put all zero here. And at the end of the year, the carrying amount for the building would be 27 million. This one, 27 million minus 600,000 and minus zero. If you have any impairment loss, you have to take it out. So here it is 26.4. So this 26.4 is your detail on your carrying amount for the building after first year transaction. Okay, now we move on to machinery. So for machinery, which is in the same paragraph, the one that I put green highlighter, it was impaired or test for impairment was done at the end of the year. So the same procedure, you need to go and find out what is the carrying amount at the end of the year, which is the one at the end of 31st of December 2023. So now I have put another working here, which is the working for impairment loss of machinery. So you are going to go and compare carrying amount on 31st of December 2023 with the recoverable amount also on 31st of December 2023. So you must find carrying amount first. To find carrying amount, take the cost at the beginning of the year. Cost at the beginning of the year is the cost here, this one, beginning of 2023, 250,000, and deduct that with the accumulated depreciation as at 1st of January 2023. This one, again, it is from the question, this one, these two. So you take from the question and you put in the correct column. Now, so you put here the two information. So that was the accumulated depreciation on the date of impairment, on the date of impairment. So on the date of impairment here, wait, I am going to erase it. Not on the date of impairment, that was at the beginning of the year. Accumulated depreciation at the beginning of the year. Now you need to go and find out what is the carrying amount. So on 1st of January 2023, the carrying amount before the impairment was 125 because 250 minus 125. In the year 2023, impairment does not take place 1st of January. It takes place 31st of December. So you need to provide depreciation for 2023 first. So you need to go and provide depreciation based on this 250,000. So you're going to check again the information given. The useful life was 10 years. So you take this 10 years and you are going to take 250,000 divide by 10 years, you get the current year depreciation. So that current year depreciation is depreciation that you need to include in the movement of PPE. So this 25,000 here, again, you are going to debit your depreciation and you are going to credit accumulated depreciation for machinery. So that is for you to include in the notes of PPE here. So you can see the row charge for the year. You have any question, class? Class? Are you there?
Yes, madam.
Hello? Are you there?
Yes.
All right. So this one, if you have any question, just call me up because I'm not really looking at the screen. I was looking at the Excel worksheet. All right. So after you have done this, you can now find what is the carrying amount at the end of the year, which is the amount that you need to find to compare with the recoverable amount. So at the end of 31st December 2023, your carrying amount is 100,000, which is you take 125 here minus 25. So it is 100,000. So take that 100,000, right? That 100,000, and you will compare with the recoverable amount. Again, I recap. Recoverable amount is by compare first and use the higher between fair value less cost to sell and value in use. From the question, value in use is 75,000, fair value less cost to sell is 90. So I take the higher between the amount, which is which one? 75,000 or 90,000? Which one? Class? Which one
Ni-
is the
90.
90,000? Because it is higher. So you put here 90. So when you compare 190, you will see that there is a difference of 10,000. The difference of 10,000 is the impairment loss. So the impairment loss will be recorded, or it will be debited. If you talk about journal entry, debit to impairment loss, I put IL, and credit accumulated impairment loss. So when you debit to impairment loss, that is in the SOPL. But when you credit to accumulated impairment loss, this is in the disclosure note. So your disclosure note will not just stop at the accumulated depreciation. So you can see here, you have extra section, which is the accumulated impairment loss. At the beginning of the year, there were no balance of impairment because there were no impairment before. And at the end of the year, you can see the impairment. You can see the blue calculation here that I did. I transfer it here because credit accumulated impairment loss, so add to the column of machinery 10,000. So accumulated impairment loss would be 10,000 as well because there are no balance at the beginning of the year. Therefore, if you take the accumulated impairment loss and you now need to reduce that also with the information that you have here, which is take the total balance at the end of the year, this one, the one I put the yellow highlighter. Take this minus this 150 accumulated depreciation, 250,000 is the cost, and deduct with the impairment loss itself. So now you have the balance or the information there is how much is 10,000. So 10,000 here is 250 minus 150 minus 10,000, which is the accumulated impairment loss. So that are the accumulated impairment loss, and you may want to screenshot it. You can screenshot yourself, right? Okay, I will now, this is the end of this question 1D. I will proceed to the next question. Please take time to screenshot, and now I'm going to stop the video.